Okay, everyone, guess what? We got disconnected by our lovely Facebook. Oopsie. Okay, let me hurry and share to my group again. Part 2. All right, sorry, we do have a little bit left if you guys want to share again. I wish that Facebook did not cut people off, but they're sometimes kind of good at that, which is, I'm sorry, everyone, we're back. Okay, what we're talking about deductions, let's wait just a second. Sorry, you guys know Facebook sometimes just like right in the middle of something will end a video. Thank you. I mean, we appreciate Facebook Live, but we wish they weren't cutting us off. So, all right, let's wait 1 second. Okay, can you get in trouble for calling tax, like when you're charging sales tax?
When you're collecting sales tax, as long as you're not over collecting, I don't think you will.
I don't see how you can how you could get in trouble for charging sales tax to the final consumer, because that's what we do in society is you charge tax to the final consumer. So I've heard that. I don't know why people would say you would get in trouble for saying the word tax when that's what you're doing, is you're charging tax. So, all right. Yeah, sorry guys, we got cut off. Oh, come back. We just have a little bit more left. Silly Facebook. We're grateful for you, but man, come on, work the right way. Okay, so we were talking about deductions. Mileage is a big deduction. What else can we deduct?
Home office. Set up an office in your house. It does have to be separate just for your business, but the standard deduction for a home office can be up to $1,500. You can take the cost, the actual expenses, which you get you calculate a portion of you calculate a percentage of your house that's business based off your office area, and multiply that times all your expenses, utilities, mortgage interest, property tax, insurance. You can take those deductions. So
even if you rent, you can get a deduction on your rent, if you have a home office.
So here's an example of converting a totally personal expense into a business expense. You're going to be doing business out of your home anyways. You have the room. You've got an office. All of a sudden, this deduction you might not have been able to take, now you can. So, home office. Other ones, your cell phone, your internet. You're doing Facebook Lives. You're answering phone calls for clients. Once again, it's hard to do the all or nothing approach, but you can say, I can reasonably justify 60% of my phone bill and 50% of my internet. You have to come up with a reasonable percentage, but an expense that otherwise you wouldn't have been able to deduct, now you can.
Right.
If you do set up separate utilities, so you do have a work phone and a personal phone, or a work internet and a home internet, then you can take the whole deduction for the work one. But you can do this. I mean, you can do it with your personal items. You can convert those.
If you rent a store, it's a deduction.
Mm-hmm.
If any of your materials, right, tables, hooks, anything for your business is a deduction, right?
Yep. And that's a question. I get that question a lot. What counts? Everything counts that you're spending on your business. If you go to the Hobby Lobby, if you go to Walmart, you're buying supplies, you buy food for a party, what are some of the other questions? Everything counts. Keep your receipts, take it to your CPA.
If you're buying food, you guys, this is, make sure like what we used to do is we would label the top of the receipt, like what the food was for. Because food, like, why do you need food for a jewelry business? Well, it was the party treats, Mm-hmm. Make sure you're labeling it and stuff like that, so that if you do ever get audited, they'll go, oh, okay, yeah, you did have a party that day, that was treats, things like that. So okay. There are some things, right, that might be questionable, but if you save correct documentation, and the thing is, if you ever get audited, then if you have good records, you will be in a lot better shape than if you don't.
Correct. If you don't have good records, if you have no records, the IRS can reverse every deduction, make you pay tax on all of your income. If you have bad records, they can reverse some of your deductions. If you have good records and can justify everything, you can show everything, you've proved it. The IRS can't say, well, you know what, jewelry you purchased isn't a deduction. Like you have your stuff together. You say, here's where, you know, here's the party I went to, here's the treats, here's, you know, the supplies I bought. It counts. Keep your receipts 5 to 7 years. It's a long time. Put them in a box after the CPA seen them, but keep them.
What about, like, some people are buying trailers? If you buy a trailer and you have your jewelry in it, it is
a deduction.
What about a shed in your backyard?
So these items, you just have to make sure you're doing it right. If you set up the shed and all that's in there is jewelry, it's a deduction. If half of it's jewelry and half of it's your yard supplies, half of it's a deduction. You buy a trailer, you put jewelry in it, you go on 2 personal trips a year with it, but you go for 5 weeks for business, I would say probably use the percentage method, 95% business, and it is 2% personal. Now, that's the flip too. You buy a trailer and you do 2 weeks of business and you do 2 months of personal, 10% business, 90% personal, but it counts. It counts.
What about, the big one is, I just bought this shirt and this cardigan. Look at these cool nails. Like,
done,
oh,
nice
I need
hair.
makeup. I need hair. Like, what about all that stuff?
What I'm going to say on that is just don't go over the top. If you typically wouldn't get your nails done, you can justify, you know, it as an expense. But if you never do your nails, or if you always do your nails, and then you do it again the day before the party, I'm going to say you're going to have to, I would not feel comfortable taking a lot of it. If you're buying a new dress and you only wear it at parties, take the whole thing. If you buy a new dress and you're using it half at parties, but you really like the dress and you're going to use it personal, half and half. Just don't go over the top.
If you buy Paparazzi branded clothes.
100%.
Okay. So there's a distinction, guys. If you have stuff that's Paparazzi branded, it's for your business, right?
Yep.
If I'm going to be wearing this to church or out in public, personally, we're not going to deduct it just because we don't want to be audited. I would much rather avoid an audit than claim a couple $100 of clothes every year on our deductions. Hair, most people get their hair cut and dyed anyway, highlighted anyway. So what, if you're going to a big convention maybe? If you're
doing a big party, you're going to the convention, you're going to be doing your huge annual Facebook Live, sure, take that as a whole 100%. But, you know, it was time for a haircut anyways. I do it every 3 months. Come up with a reasonable percentage. The IRS isn't going to take 100% for the most part. They're not going to take 0%. Find what's reasonable. If you're selling $10,000 of jewelry and you've got $5,000 of clothes expense, that's a huge red flag. So just be moderate. Be moderate in it. So.
Yeah, I can tell just based on his thing that it's kind of a gray area and it can raise red flags, right? It can.
Yep.
So in Chris's and my approach to taxes, we want to avoid red flags because we never want to be audited. We never want to. So, like if it's a borderline area, if Matt says, then we won't deduct it because we don't want to do the things that are going to cause the IRS to look more in depth at everything because we don't have records for every little thing, right? Like we're not perfect. So we don't want to draw any attention to us to make them pay special attention. We want to be one of the crowd. We don't want to be one of the special ones they look at.
Yep.
But tablecloths, what about like papers and, I just bought some shelving, things like that?
Yeah. I mean, you're using them in your home office. You got shelves, you got paper for your printer. it's all deductible. Try and separate it if you can. Buy the paper with your business card. Put it in the back corner. This is my business paper. But yeah, it's all deductible. If you do split, I mean, you buy a big box of paper, it's going to last you 5 years. Half of it's business, half personal. I mean, just come up with your percentage that. But you're using it in your business, it's a deduction. So
Business insurance would be.
business insurance is a deduction.
What about health insurance, though?
Health insurance is personal. There's ways that you can count it as an additional deduction on your individual income tax. If you're an S corporation, is a deduction there, but on the business side it doesn't. It's not. It's basically not a deduction on the business side. It is personal. If you have questions on health insurance, call me. That one's kind of up in the air, a little hard to explain. So it usually involves several back and forth questions. So
if it is for your business, it is a deduction.
yes, if you're spending on your business, everything counts. Anything with questions, just point out to your CPA. One exception might be life insurance. Life insurance, for the most part, is not a business deduction, but it can be. But anything else, if you're spending on the business, include it. If you have questions, if you think it's a gray area, just point out to your CPA and ask. So,
Okay, internet. Let's answer this one again. Internet.
Internet, come up with your percentage. What's personal, what's business? I am doing stuff. I'm ordering online. I'm doing the Facebook Live. If I wasn't doing all this, I'd switch to a lower plan. Come up with a reasonable percentage. 50%, 75%, 25%. Just what you feel comfortable with. Every CPA is different. A lot of CPAs will be, well, you do it for business, it's 100%. Others will be super strict and be like, well, you only use it for 1 hour a month, so we're going to give you a 0.7% deduction on your internet. Just find what you're comfortable with. Talk with your CPA.
What about travel? So I go to Vegas for convention. I go to some meetings. I'm going to go on a cruise, but it's a paparazzi trip. What if that is deductible?
It's deductible. It's all deductible if you're doing it for a business purpose. You're going to go to Las Vegas. You're going to go to the convention. It's deductible. The vacation ones, I'm going to go to Vegas for a week, and then I'm going to stay for 3 weeks. You're probably going to have to do a percentage on your travel back from there, back from the vacation. But it's Paparazzi cruise. We're going to fly to Florida. We're going to go do the Caribbean. We're doing our convention. We're learning a lot, and then we're just going to come right home. All deductible.
Yeah.
So.
Yep. Keep track of your records. The question you should be asking yourself is this for my business? Right?
Okay. Yep. I got a lot of questions on host gifts.
Hostess rewards. Yep.
Hostess rewards. You buy 50 pieces of jewelry, you get 5 for free. Can you sell it? Yes, you can. How do you get an expense for it? You got it for free. You didn't pay anything for it, so you're not getting an expense. So you got 5 free pieces of $5 jewelry. You sell it for $25 plus sales tax. You don't have any basis in it. You're going to have to pay tax on the whole 25. But you didn't pay anything for it. So there's not a deduction when you get something for free. You have to pick up the whole sales price when you sell it. But you didn't have to pay for it, which is always good. So,
what about giving free pieces away? We have what we call blessing bags, or we give free pieces to people because we want to make their day. What about those free things that we're giving away?
There's not a deduction. If it's the host gift, you got it for free, and then you turn around, gave it for free. The thing to remember is, what did you pay for it? I didn't pay anything for it. I don't get a deduction when I get rid of it.
But if you're giving away more than you get free, like in a year.
So you got 50 free pieces, but you gave away 100 free pieces. That 50 that you paid for, you got 50 free, but the other 50 you had to pay for should be in your inventory expense, your cost of goods sold expense. Your purchases from Paparazzi got put in there. So at the end of the year, when we do your final inventory count, your inventory's 50 items less than what we purchased. You're getting your deduction right there. So if you're giving away more free than what you got free, there is a deduction because you purchased it from Paparazzi and it's going through cost of goods sold. So,
but the deduction is not dollar for dollar what you bought it for.
Yep, it's
Because
a
it's
deduction, not a credit.
It's a deduction, not a credit.
So it reduces your income, which is then multiplied by the tax rate because of the multiplication. That's where you're getting your tax percentage. So you're in 12% bracket, the 24% bracket of your expense is your reduction in tax liability. Any other questions on host ones?
Not right now.
My other questions I got: what records, receipts should you keep? Keep all your receipts. Anything that you spent on the business, anything you're going to claim, keep those receipts. Keep them 5 to 7 years. There were a couple questions on how your business income is going to affect all your other income, specifically things like Social Security, disability. Those are kind of personal situation questions. In general, Social Security, if you have business income, it's going to increase Social Security subject to tax. Disability income typically is not subject to income tax, so this wouldn't affect it. If you have a loss from the business, you can offset other income. Reduce your tax liability. So if you have more questions than that, talk to your CPA.
And I always say, people ask me questions on how much can I make with disability. That is one that I am not comfortable answering. I always say go to the disability person in your state.
Yeah,
because
we wouldn't know.
Like that is one you should go to the source. If you're on disability and you have to keep it for insurance or whatever, you need to go direct to the source. I would not take, the word of someone that may not be completely familiar with disability, like in your area and things like that. Those are things that you really want to go to a professional in that area for.
Yeah, CPAs don't always. A lot of those rules are specific to the county, to the state. They're not necessarily in the tax code, so it's not things we're monitoring, looking at. If you have questions on your disability income, like Michelle said, go to the disability office, ask your questions there for your best answer.
Quickly, jewelry we keep. Look at this hot piece I kept last week. I wasn't going to, and then I'm like, dude, I got this. Kate, is this a deduction if I keep it?
Are you keeping it for the business? Or are you keeping it for personal?
Well, I mean,
both,
right? But, I'm wearing it all the time to advertise.
That's true, advertising.
I wear it in shows. I wear it to parties. I mean, I'm always advertising my business through wearing it. But yes, I mean, I wear it to church.
Let's see. How many pieces have you kept this year personally?
I have kept more than ever. Ooh, I'm finally to the point where I'm like, I can keep a few pieces for $3. Maybe like 30 pieces.
I mean,
that's
it's true.
$100
Advertising, you're out showing it around.
Excessive would be what you would be concerned about, right?
Yes, excessive. If I'm buying 5,000 pieces and I'm keeping 500, that's quite a bit. But I'm keeping 30 pieces a year that I'm going to show this year, and then next year I sell. I mean, that's totally business, and write it off. But I really like this piece. I'm going to keep it forever. Got to come up with the line, is it advertising? And I talk about it when I'm out with people, and I just wear it and say, I love my necklace. It's kind of your CPA and you, what you feel comfortable with. But like you said, avoid excessive. Anything excessive is going to get a red flag.
What about, let's say I'm doing a show and it rains and I didn't protect my jewelry and I have a loss of jewelry, or something breaks as I'm loading it.
Breaks, stolen.
Yeah, what of that is a deduction?
All of it's deductible because remember, when you purchase it from Paparazzi, you put it in cost of goods sold. It got ruined, you had to throw it in the garbage, someone stole it. It's not there in your inventory, so when you do your inventory count, it appears as if you've sold it, you've gotten rid of it, it's a deduction. So when you purchased it, that's when you're getting the deduction. You didn't get the income from it when you sold it. But it broke, you had to throw it away, it got damaged. You got your deduction when you purchased it from Paparazzi.
Yep. So there you go.
So.
What about if you have a house fire or a flood for those in hurricane zones?
And it ruins all your jewelry. You have nothing left at the end of the year. It's all a deduction when you purchased it there.
Yeah. Hopefully you have some insurance. You know, guys, that's where insurance comes into the play more than taxes. But if you get a whole bunch ruined, it would be like a deduction, right?
Yep. I mean, sorry.
He's a heavy drinker of water.
I'm getting a little hoarse. But yeah, I mean, everything was ruined in a natural disaster. Nothing you could have done. I mean, it is a deduction. If you do have insurance and insurance reimburses you for it, you'll have to you're taking the deduction on your tax return because everything was gone. But remember, you have insurance. You're going to have insurance income to offset that deduction now. So just remember that. If the insurance is going to cover part of it, there's going to be a little income from insurance to offset your deduction.
Okay. We are from North Logan, Utah.
Okay.
Oh.
Business license. Do we need a business license from our personal office or from our city? And most of the time it's yes. Call the city office and ask. Most of the time it's $15, a one-time fee.
When people ask me that question, I always say that's a city or county question, depending on where you live. Mm-hmm. And usually they're going to tell you yes, because they want your money.
$15.
That's
a cheap license, though.
Yeah. As far as taxes, do you have anything with your taxes that says you need a business license? In some states might be different, right?
For tax reporting, there's nothing specific that says I need a business license, but your city ordinances are going to say any business operating within city limits needs a business license so we can make sure they're being compliant with blah, 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 blah. So
if you ask your city, they're
more than likely going to say
99% say yes. I think where I live, it's like $50 a year.
So, okay. It's a cheap license. Most of the time, 99% of the time, yes.
But if you don't ask them, often they don't know.
True.
Oops, forgot that one.
Someone asked the question, do you have to report your cash sales on your income tax? Is that fraud if you don't? Answer is yes, you have to report it. Report everything. If you're not reporting your sales, it's fraud. And the bigger the fraud, the bigger the penalty in tax penalties and civil penalties. So
yeah. Someone asked that in my group, and I said, okay, let's apply this to a real business, because some people say, you're not a real business. I'm like, okay, well, if you went to a grocery store and the grocery store did not report its cash sales, does that sound legal? Does that sound like the government's gonna be okay with that? No. And once again, if the government finds out that you're not reporting your cash sales, you will be in hot water.
Oh yeah.
Major hot water. Is that what people can be sent to prison for?
It's got to be major fraud. So
major fraud.
Hundreds of thousands of dollars to get sent to jail. But fraud, they've got different levels. So you can have just plain fraud. Penalties are, I can't remember the exact percentage, but it's 5% of, taxes that should have been paid. But you get to a point where they call it substantial fraud. It can be up to 25%. I think it's 25% of taxes you should have paid. And it adds up. I have one, I had a notice from a lady who, her husband passed away. He did all the taxes. She missed one of the new 1099s that came in from their retirement income. The effect on her tax return was it increased her taxable income $25,000 in total tax. So the additional tax she had to pay was, I think, $7,000. But then the IRS reported just assessed a substantial underpayment or underreporting of income penalty of $5,000. just because she missed this one 1099. Luckily, I was able to get her out of it. She had a reasonable cause. Her husband passed away, and he did all the taxes. They reduced the penalty, but she still had the tax due. But if you're she had a reasonable cause. If you're not reporting your income as a business, you don't really have a justifiable reason. Even if someone passed away, even if you had cancer, even if you had to move across the country to restart your business there, you don't have a justifiable reason, and it's fraud, and the penalties are huge. Right. So report it.
Yes, you guys. If you're on my team, I always talk about doing business with integrity. Okay, even though nobody loves to pay tax, still, like, if you really say you have integrity, you're going to report you're going to have integrity even with your taxes. Don't you think? Because not only do you want to maintain that you have integrity, you also don't want to ever be in trouble with the IRS, because they're not nice. They're not. Like, I'm not a CPA, and I know that. Matt is a CPA, and he can tell you they don't play games, and they don't care about money being tight.
They don't care about your feelings. They don't care about money being tight. What they care about is how quickly they're going to get their money from you.
Yeah.
And everybody's got to pay taxes. Everybody wants to drive on the road, wants to have clean water, wants to have the police force. Remember, taxes are doing thing that benefits everybody.
Right.
Yeah, we don't want to pay them, but do you want to trade what you're getting when you pay your taxes?
Right. So even if you make $50 a month, $50 a month times 12 months is $600 profit. That is something that should be reported, right?
Right. Make sure to report it. Question of, you weren't keeping track very good. You lost your box of receipts. What can you do at that point to report? The IRS does allow estimates once you've used every reasonable means to try and track down your expenses, but estimate conservatively. If you have prior years, try and use percentages from prior years. My shipping out to customers was 1.5% of gross sales. I'm going to use the same percentage this year. So if you lose your receipts for whatever reason, you can estimate, but you're not going to lose your receipts every year. You shouldn't be estimating more than once. Keep your receipts. Track it digitally if you can. That's why the online resources for tracking receipts and your income, your profit and loss are good. So
yeah,
it's getting harder to justify I lost my receipts to estimate your expenses, if that makes sense.
Can a bank statement replace receipts?
Yes, it can replace it. It's easy to see Paparazzi, but I went to Walmart. Those 7 months ago, I lost my receipts, but I'm look at my calendar. I had a party that day. I'm pretty certain that was for this and this. Highlight it on your bank statement. Write what you think it was for. Use that. If you're going to use your bank statement for all your receipts, just every month you get your bank statement and right next to every single one, say this was for Joanna's party. This was supplies for my office. Here's postage to mail everything off. Just write your reason next to some of those ones. The IRS might be like, well, what'd you spend $200 for at Walmart? Mm-hmm. Is that really business? Just right next to it, this is what it was for.
Right.
So.
What if you had two businesses in a home? Use a CPA.
Use a CPA. The IRS does not allow double deductions. So if you're taking a home office deduction for one business, you can't take it for the other one. So if you have two businesses, just rule of thumb, you can't double deduct.
Right. Okay. Do you have anything else?
That was all my stuff I've got prepared.
Do you guys have any questions? We'll do a few minutes for questions, and then while you guys are coming up with some questions, let me quickly say this. Matt, why should you use a CPA? Why? So some of you are like, well, I only made $1,000 this year. Should I use a CPA? Or I made $30,000. You should use a CPA if you made like substantial money like that. But you know, if you're not making tons and tons of money, should you use a CPA?
I would suggest at least consulting with one periodically until you feel like you're big enough to use a CPA. CPAs do cost. It's not cheap. I grew up in a family where money was tight, so sometimes I see our bills go out and I cringe a little. I realize it's expensive, but I mean, if you're only doing $1,000 a year, maybe consult with a CPA every couple of years. But I mean, if you're doing $10,000 a year, it's worth it for at least a consultation, if not the tax return. And truthfully, like, I saw tax returns come in from our office, from H&R Block, that they were charging more than we are, and they're supposed to be the cheap place to get a tax return. I would never recommend a place like bias as a CPA.
No.
I would never recommend a place like H&R Block, because who's going to be there next year?
Right.
Who's going to be there in 4 months when you get your notice about something was missing? A lot of those offices are only open January through April, and then they're MIA the rest of the year, and the next year they've got a fresh crop of recruits from the local university that they have helping them. So that's my one thing with who to use, what to use, and what to look for in a CPA. When are they going to be there all the time? How accessible are they?
Can you use them over and over and over? See, can you imagine us? We have multiple businesses, multiple homes like that we rent out. Kids, you know, like our taxes are a little complex, don't you think?
Yes.
Would we want to go to a new person every year that doesn't know any of our background?
No.
Matt knows our situation. He knows, like, and not just because we live by him, but even before we moved by him, he knew us and he could help us, and he can say, oh, okay, well, what about this part of your finances, or what about this? If you use the same person year after year after year that is knowledgeable, they are going to be able to, this is what I always say, a CPA should save you more money than what they make you. Mm-hmm. So a good CPA will find good deductions for you, keep you out of trouble, give you some peace of mind. Plus, you know, from year to year to year, they're going to save you time and everything like that. If all you have to do is turn in one 1099, okay, H&R Block, right? You know, if you're a college student and you get 11099 and you don't want to file yourself, okay. But if you have a business, it is worth it to have a CPA on your side. Not just because they know your situation and can help you with questions, but what else does a CPA do that a normal, like one of those pop-up shops, not going to have?
They ask the back questions. So when I do Michelle's stuff, I've gotten used to it. I know things to look for. I know that I should be seeing these 5 1099s. I should be getting the list of information about these 4 bank accounts. Well, one of those didn't come in this year. I can reach out and say, hey, Michelle, I need information on this. Do you have it this year? She could say, oh, I closed that. Okay, good. We'll get the information for what we had, but I recognize something's missing. If you're one that hops CPAs every year, you're going to miss those things. Those are when you're going to get the notices about something that was missed, not by fraud, not because you purposely did it, but no one remembered it. So find a CPA you like and stick with them as much as you can. There's times when to fire a CPA, when to hop shop, but if you're doing it every year, honestly, you're probably playing the numbers game. If I go to a new CPA, they're going to charge me less in the first year and then charge me more after. Find one that, you know, I'm going to bill you $600 a year, and yeah, it's going to go up as cost of things go up, but I'm going to know everything versus, well, I'll give you a first year discount of $150. Well, next year I'll switch to another one. Next year I'll switch to another one. Things are going to get missed. You're going to get notices. You're going to end up paying more by the time it takes the CPA to address those type of things. So. And,
okay, what happens if you go to a pop-up shop or you're constantly changing and you get audited?
Yeah, who's going to be by your side? Who's going to be the one that remembers that? There's a lot of the notices we get. I can look at it and be like, oh, I remember that. I remember having questions. They didn't remember. I know the situation. I did it. I filed that return. I talked with the client. I remember it. Versus, all right, I got this notice. Well, you remember what you did for the guy that just barely showed up, you know?
A CPA will help you fight an audit, right?
Correct.
So that is one of the reasons to use a CPA, especially if you have complicated taxes. A CPA has your back, and they will go to bat for you. If you use a pop-up shop, or somebody that's not a CPA, or if you don't have a CPA, if you get audited, you are on your own, right?
Right.
So, and one phrase I heard you use, a CPA, depends how strict your CPA is. Okay? So every CPA is different, and define what you mean by how strict your CPA is and things like that.
So there's the letter of the law written in the code, but a lot of it's left up to interpretation. How does your CPA interpret it? I tell a lot of people that, a CPA really is a lawyer who focuses on the tax code. And we know laws are all up for interpretation. Who's going to determine what really is or isn't? So there will be some CPAs who are like, well, this is what the law says, and this is exactly what it means. And they're going to limit deductions because this is what I think the law states, and I'm not going to do anything more than the law says. Versus another CPA who's been doing this for years. He's seen what the IRS does. And he's going to say, you know what? I think this is totally reasonable. I think this is how the law applies to that. I'm going to allow more deductions than the other one. So it depends a lot on how your CPA interprets the law, how strict they are to it, and what they feel comfortable with. Even within our own firm, I got some CPAs who are very aggressive, very lenient, and say, this is how I think it is, so it's going to be a full deduction on a camper if it's 95% business instead of, it's going to be 100% business even though it's 95% because I think we can justify that. Versus the other guy that says, well, the law is the law, and you're actually only using it 5 weeks out of the year, so that's 5 out of 50, that's 10% business for business, even though you could use it for business the rest of the time. Every CPA is different. They interpret the law differently.
And a CPA, how strict they are, like I think Leslie said, basically it's what they're willing to help you justify if you get audited, right? What they're going, and
a good CPA backs up his opinions, backs up his interpretation of the law. So, it comes down to audit. If it's then the CPA's job to present a reasonable cause to the IRS agent on why it should be deductible. And a good CPA will have a very justifiable cause, and those shouldn't be reversed for the most part.
So if you want to find a good CPA, how do you? First of all, I will say Matt is you can't have a CPA that does not live where you are, right?
Correct. You can have a CPA in any state.
My
anywhere.
mom, she moved 2 hours from her own. She's going to keep her CPA that she's used for 30 years. Why would you change, right? Mm-hmm. You wouldn't. So you can't have
clients in all 50 states.
Yeah. So his firm has clients in all 50 states. Matt is taking clients if you would like to use him. He's very familiar with Paparazzi because he does my taxes. He also did 10 or 12 other Paparazzi consultants taxes last year. So he is familiar with the income tax and kind of how Paparazzi works. If you would like to use him or consult with him, he'll give you, answer a couple of questions for free. If you want him to do your taxes, someone on my team had him do taxes, and this is what she said. I tried to find her comment. She said, he was awesome, and he saved us money over the person that was doing our taxes that didn't know that much about direct sales. So just because he has a title of CPA doesn't always mean they're going to be more expensive than, someone that may not have as much experience. But if you want to contact him, because we had to start over, I didn't put all of his information in. I will go back. I will put his information both in the comments and in the post. It's Matt Jensen. He is a CPA with Cook Martin Polson here in North Logan, Utah. That's in Logan, Utah. And your email address is mjensen with an en at
cookmartin.com.
cookmartin.com, and I'll put the phone number, which is 435-750-5566.
5566.
5566. So, yeah, if you're okay. This is my thing though. Matt is a professional. He works long hours, especially during tax season. If you're going to ask him a question, make sure it's not covered in this video. Not this one or the first one, okay? Like, if it's covered in one of the two videos, you don't need to take up his time. You can think I'm mean or whatever, but as a professional, as a CEO of your own business, go back and watch part 1 and part 2. If your question is not answered, then contact him. He said he would. I don't want him getting thousands of questions that have already been answered. Okay, that does not show us well as professionals. If you would like him to do your taxes, he is happy to discuss like personal, like your individual situations and things like that. Like I said, I will put it there, but if you're not going to use Matt as your CPA, what are some other ways they can find a good CPA? What would you recommend?
So, I mean, you're going to go to Google, finding a CPA that you like. Questions to ask are whether you want to be able to walk in and see your CPA, or whether you don't mind if they're out of state. If you're one that likes to be able to have a face-to-face conversation with your CPA, I mean, you're looking local, but ask referrals, ask your friends. Who do you use? Who's worked good for you? Who don't you use, and why not? I would recommend, not to say that single practitioner CPAs are bad, but if you go to a one CPA shop, you're limited to one brain. A lot of those guys also don't spend the extra money to buy the right research software to kind of do more in-depth research. I would suggest trying to find a CPA firm with a few CPAs, because we do bounce ideas off each other. We do have specialties. Usually when they have a few CPAs, they're making more money. They're more willing to buy the research softwares to help them make sure they have the right answer. Look at fees. If you get a CPA in a big area, a big city, you're going to pay higher fees because those CPAs think that they're top notch and they can justify a $2,500 return, where you can get just as good service from somebody who's not in a big city and they charge you $500. If you're looking for if you're looking at fees, higher fees don't necessarily mean bigger service. It might just mean they're in a bigger market and that's the price in their city.
Right. Well, and if you think about like real estate in where we live versus real estate in Chicago, it's probably going to be a lot less. So they're going to have their overhead will be lower in an area where it's not as expensive. New York versus Logan, Utah, I can guarantee you a CPA will be paid more in New York than Logan for the same amount of work. Right?
Right.
Yeah.
Right. And then just look for a little bit of experience. Probably a good CPA's got at least 4 years of experience under them. Been through 4 tax seasons, seen a lot of those things. So you don't need a big name. We're not a big 4 firm. There's 4 big accounting companies, tax companies in accounting, called the big 4 firms. And you don't need to have the most expensive company do your return. Just look for the experience, or know whether you want to be able to go in and talk, or whether you're going to see him across country.
Most of ours is done, even though we live by each other, most of ours is just done through the computer. Mm-hmm. So even though I do see him on Sundays, or even though I can drive 4 or 5 miles to his office, most of our stuff is just either done through the phone or through like emails and, hey, can you send me this document? And any physical document, you can just put that in the mail.
Okay.
Right?
Yep.
Typical price range?
Price range for CPAs, you're going to get it all over. You're going to have the one-man shops they're charging less to try and get more clients. They might charge you $150 to $200 to your return. You could, depending on your return, go up to several $1,000s. I think a fair price on a business return from a reputable firm would be in the range of $400 to $800 for a business return. $300 3 to 5 for personal return. Once again, that does depend on what goes on each return, how complicated they are, the time it takes to do them. But
ours are a little more expensive.
So, and that's just the tax returns. That's not including payroll or consultations. That's just the tax return. So,
let's see, what else was I gonna say? Anyway, I know new releases dropped. Somebody keeps asking, we answered, yes, you can call tax, like the tax that you're collecting, you can call it tax. Yep. That's what it is, it's tax. All right, any last questions? Like I said, any last questions for Matt while we've got him here? I will post his information if you want to use him. Their firm does a great job. We've actually worked with several people within the firm. I don't know why, but we've always been satisfied with the service that we've got from the firm of many. How many CPAs do you have?
Oh, 10? I always have to count.
10, 15?
15-ish. 15 CPAs. We've got 5 bookkeepers. We've got another 10 staff, and then our secretaries. So, and it's good to have, like I said, it's good to have a more than just a couple people, because we do bounce ideas off each other. We do have specialties. We work with different people because payroll. I have one of our bookkeepers working on our payroll stuff, and I do the taxes, and we got another accountant that comes and helps with consultations. And so it's good to have a team approach when you go see a CPA, to be able to visit a team of accountants instead of just a one person shop.
Right.
So
should they claim your kids or spouse on your personal, right? Is that what you mean?
So that's a question on your personal return.
Of course.
And the answer is yes. For the most part, there are very few instances when that would not be the case. And claiming kids, for the most part, you're just worried about the child tax credit, is what you're looking at. And so the answer on that is most of the time is yes. So.
All right. So thanks you all for coming on and talking taxes, our favorite thing in the world to talk about. I can always tell when Chris is working on taxes because he's a little grumpy. It's like not an easy thing at our house. People say, "What does Chris do?" I said, "He does our taxes," and that's a lot. That's like a huge job to do our taxes because they're crazy. Okay. Oh, sorry. If you pay cash for something, what should they do? Like,
try and have a receipt. If at the store you're paying cash, you still get a receipt. But if you're doing a person-to-person transaction, if you're doing the selling, try and invoice people, write invoices out. If you're buying something with cash, if the other person doesn't have a receipt, I would just get a cash ledger, and write it out, and that'd be pretty easy to justify. Just the cash ledger. On this date, I purchased this from so and so. If you have a contact phone number, I might write that next to it just in case. Be able to say, well, someone says, "Well, did you really do that?" And so, here's my phone number. Let's call the person and see. So. Yeah.
So, like, if you buy a table off Craigslist, or even if you just scribbled it on a piece of paper with the date and whatever, and attach that to your taxes, that's better than nothing.
Yep.
And chances are you're not going to be audited over a single purchase. But.
And really, once you set up an LLC, not filing as a Schedule C. So once you have a business tax return, your chances of being audited drop by 16%. 16 times less likely to be audited when you have a business tax return versus being on a Schedule C. And a personal tax return, it's like a 0.5% chance of being audited, something like that.
So yeah, another reason to have an LLC or an S Corp is to avoid or a lessened chance of being audited, right?
Yep.
Because if you're doing a Schedule C and claiming you have a business with all this money coming in and out, you're more likely to be audited than if you have a business entity, a legal entity set up. So a third reason to set up a business. So, all right, you guys, thank you so much. I will go write his information if you want to use him or if you have a question. But once again, please respect his time. Watch video 1 and 2 if if the question is answered in those, then don't ask him. You, as a professional, would not want people to bombard you with questions that you already answered, so don't do it to him. I'm being the mean one saying that. So, all right, you guys, have a great day. Go out, work your business. Bye-bye.